Good evening. Welcome and thank you for joining part 1 of your Benefit Fund Review and Retirement Awareness series. My name is Pete Tonya and I'm the Executive Director of Your Benefit Funds. This is the first seminar where we wanted to review your benefits in a summary fashion, to make you aware of the benefit entitlements you have earned as a union carpenter as you prepare for retirement. We would like to have had this seminar in person, but we also are adapting to the current economic and social environment that we're all facing, and are overjoyed in the response we received and the number of you that chose to join us in this remote version of the seminar. The reality is that retirees can expect to spend 20 to 30 or more years in retirement. And for many, this is an exciting yet overwhelming time in which several important decisions must be made. And we will review a couple of those important decisions that you will have to face and make before you sign your retirement papers that will affect you in retirement and the next stage of your life. The average retiree needs approximately 70% of their pre-retirement income in order to maintain their current standard of living, and less than 56% of US workers actually try to determine how much they need to save in order to achieve their retirement goals. So congratulations, you are in this visionary 56% by joining us here tonight. But whether you're an apprentice, mid-career journeyman, or within a couple years of retirement, it's always beneficial to understand your benefits and entitlements that you have earned throughout your career. But preparing for retirement is of the utmost importance. Tonight, you will learn the following: the importance of preventative care that you have access to within your health benefits, how to qualify for health care at retirement and what to expect, how Medicare will affect your retiree health coverage, how to qualify for your pension and the options that you will have available, what to expect during your retirement appointment, and we'll touch upon how your annuity accounts are calculated and paid out. And also look out for part 2 of the seminar series, where we will focus on the retirement financial awareness. It will be hosted by a professional retirement planner and be held on November the 19th. Please look out for an email with registration info or the events page on the fund's website at ncf.carpenters.fund. Joining me on the panel tonight is Ian Roog, the Edison Office Funds Director. Ian is responsible for the day-to-day operations of the fund office and will present on your medical benefits. And then we will have Junior Camacho provide an overview of the retirement benefits, namely your pension and annuity benefits and entitlements. And lastly, we'll complete the evening with a question and answer period. Before we get started, if you have any questions during the presentation, you can type them into the question box. This slide is showing you examples of where you will find the question box depending if you are using a home computer or laptop or a mobile device. The fund staff will be monitoring the questions during the presentation, and we will answer any and all questions at the end. Because we had an overwhelming response to this seminar and so many people in attendance, we will need to filter and limit the questions. If your question is not listed and answered at the end, we will try and follow up directly with you in the next couple of days, or you can communicate with the fund staff directly, either through email, or you can use the chat box on the fund's website, or you can call us. A reminder to always check out the fund website and download the app for benefit information and important announcements. Also, use the new chat feature to connect with a staff member during normal office hours. A notable feature on the website is the member dashboard. You can check your eligibility, review hours, check your pension credits, see your annuity account balance, plus update your phone number and address. Hopefully, everyone is reading the monthly newsletter to stay up to date on the latest fund news, announcement, and benefit reminders. We know how exciting you find benefits, so we have limited the newsletter to a few pages of important and relevant information. And we encourage you to at least review it and read up on the articles that are important to you. Also, if you're on social media, please follow us on Facebook and Instagram. And now I'll turn it over to Ian.
Thank you, Pete. Good evening. My name is Ian Roog. I'm the New Jersey Fund Director for the Northeast Carpenters Funds. I'm going to go over the health and welfare benefits for active members at this time. In this section of the webinar, I'll be going over the active medical plan, preventative care options available at no cost to the membership, your eligibility as a retiree, Medicare in your retirement, and the COBRA coverage options if you do not qualify for retired health. We're now going to review the coverage options for the active medical plan. Your medical insurance and benefits are provided by independent administrators through the Blue Cross Blue Shield network, which is available countrywide. Behavioral health benefits are provided by mental health consultants, or MHC, and are carved out from the Blue Cross Blue Shield network. Your prescription benefits, as they have been since 2005, are provided by Express Scripts. The fund is excited to announce that we've partnered with MD Anderson Cancer Center at Cooper to be a new preferred provider for cancer treatment. As long as you go to one of the many MD Anderson at Cooper locations for cancer treatment and follow-ups, the copays will be waived. MD Anderson Cancer Center at Cooper will provide our members with concierge cancer treatment in the event that you or your family members require this care. In-network copayments for eligible participants and dependents remain as they have been for the last few years. On the medical side, $10 office visit copays and $100 ER copays, which are waived if you are admitted, are the only two copays that you'll be requested to pay under the medical plan. For prescription drugs, it's $5 for a 30-day supply through a retail pharmacy, $10 for a 90-day supply through the mail-order pharmacy, and for brand name drugs, both at retail and mail, it's a 20% coinsurance. I want to stress that these copayments are in-network only, and as long as you stay in network, you will have no additional out-of-pocket cost. In this section, I will review preventative health options and proactive screenings that the trustees encourage all members to have done, not only during their working career, but even more importantly as they approach retirement age. The trustees encourage all pre-retirees to take advantage of the preventative health options and screenings available to them at no cost to ensure that they are in their best possible health and can enjoy a long and healthy retirement. Depending on your age, you may have already discussed these screenings with your doctor. If not, you may be avoiding this discussion. Males starting at age 45 should have a colorectal screening, and at age 50, a prostate screening done. If you have a family history, your doctor may recommend starting these screenings earlier. While these screenings may be terrifying to you, they may save your life. Women are recommended to begin the following screenings as you can see here. Cervical screenings should begin at age 21, mammograms should begin at age 40, and colorectal screenings at age 45. You should have had conversations with your doctor about beginning these screenings as you reach these ages as specified. If you have not had these conversations with your doctor, please bring this information up at your next visit. The trustees believe that these screenings save lives and encourage all members and dependents to have them completed at their recommended time as specified by medical professionals. Again, these screenings are available at no cost to the membership and their families. The next portion of the active benefit that we are going to review is a health reimbursement account, or HRA. This account helps cover any out-of-pocket medical costs that members may incur. Everyone should be familiar with their HRA account as it has been in place since 2012. Your HRA account provides tax-free reimbursement for out-of-pocket medical expenses such as medical and prescription copays, dental or vision premiums or expenses not covered by the fund. There are two ways you can access your individual HRA account. First is by utilizing your Blue HRA MasterCard when paying for prescription or medical copays at the point of sale. Otherwise, any other deductible medical expense that you pay for out-of-pocket, you can submit claims both paperless and painless through the web portal and mobile app. Please visit the HRA section of the fund's website for download and login instructions. The number one question the fund office receives regarding the HRA from members who are contemplating retirement is what happens to my HRA when I retire. Everyone can stay calm, as once you retire, you will be able to continue to access your HRA balance the same as when you're an active member. You can use the HRA to reimburse your monthly premiums for retiree health care and any other eligible medical expense you may pay out of pocket. In the event that a member passes away, the retired member's dependents will continue to be able to access the HRA account until it is exhausted. Retired health eligibility plays a large factor in deciding when a member retires. Members must meet the following guidelines for retired health plan eligibility. You need to be a minimum age of 55. You need to have 25 years of active coverage. Please note that these years do not need to be consecutive. You also need to be actively covered at the time of your retirement and in good standing with your local. Please give the fund office a call if you have any questions regarding these rules. In addition, any premiums that you may be required to pay are due on the first of each month. Retired health coverage has different premiums for pre-Medicare retirees and Medicare retirees. The premium for the pre-Medicare retired plan is $1,042 per month per family. For the Medicare plan, which occurs at age 65 and beyond, the premium is $200 per person per month. A single Medicare member will pay $200 per month, and a married Medicare member will pay $400, $200 for the member, $200 for the spouse. The trustees are happy to announce that effective January 1st, 2021, the Medicare premium will be dropping to $183.05 per person per month. Please note that the premium payments start date varies depending on the hours you work in the 12 months prior to your retirement. If you have any questions regarding your specific premium start date, please contact the fund office at your earliest convenience. Another big question that we have from retirees or members who are thinking about retiring is what happens when I turn 65? So turning 65, Medicare becomes your primary health coverage. You're automatically enrolled in Part A and Part B by Medicare. You'll get a copy of your Medicare card in the months prior to turning 65. So the only thing that you need to do is send a copy of that card or your spouse's card into the fund office when it's received. So we just reviewed how to qualify for your retired health plan. Now, the next question is, what happens if I don't qualify? In the event that a member does not qualify for the retired health plan, they will have two options available to them. The first option available is to seek coverage on the individual market. The second option is to continue coverage through the fund through COBRA. This option allows a member to purchase active coverage from the fund for a period of 18 months. Currently, the rate for Level 2 COBRA coverage is $1,374 per month. Please note that these payments are eligible for reimbursement through the HRA. That concludes the review of the medical benefits. Please note all questions will be answered at the end of the webinar. I'm now going to turn this over to Junior Camacho, who will review the pension and annuity funds for you.
Thank you, Ian. I'm Junior Camacho, a retirement specialist here at the Northeast Carpenters Funds. In this portion of the webinar, I'm going to provide an overview of your pension and annuity funds. This overview will cover retirement planning, which are going to be your pre-interview guidelines, requirements for your pension eligibility, 5 monthly retirement options, and we will review a pension retirement example. Before scheduling an interview for your pension, contact the fund office at least 6 weeks prior to your target retirement date. We will then send out a retirement package which is specific to you. Once you have thoroughly reviewed your pension package, you may then call the fund office to schedule an interview. Due to COVID, we are no longer having in-person interviews at this time, so you will be scheduling for an over-the-phone interview. They do typically last an hour, so be prepared. Pension payments also begin on the first of the following month, so be mindful of that when scheduling your appointment. What to bring to your retirement interview? If you're married, your spouse is required to attend the appointment, as signatures will need to be notarized. Please provide copies of your marriage certificate, birth certificates for both yourself and your spouse, as well as your photo ID. Also, we are going to request your direct deposit information. Please provide a voided check to ensure that we actually have the correct information as far as your account number and routing number. Unreduced early retirement pension rule of 85. What is the rule of 85? Well, it is your age plus your years of service. As long as they equal 85, you have the rule of 85. There will be no reduction to your pension if you qualify for this. For the handful of members who have the rule of 85 but are younger than 55, you still have to wait to 55 to collect your pension. You can actually retire at 55 with less than 30 years of service. However, you will receive a reduction for an early retirement. Here's an example of a pension retirement. You have your member Joe Wages, he's age 55, and his spouse Jane Wages, age 53. Joe has 30 years of service and meets the rule of 85. So 55 plus 30 equals 85. Listed below are the 5 monthly retirement options that Joe and Jane are going to have to choose from. 2 single life annuity options being the 60 or the 120 guaranteed payments. These are going to be a lifetime benefit for Joe. However, it is not guaranteed lifetime for the spouse. What does the 60 guaranteed payments and the 120 payment entail? Well, Joe's going to have 60 payments guaranteed to him whether he passes within those payments or not. If Joe collects 30 payments and passes, Jane will receive the other 30 payments to equal 60, which are guaranteed. Once the 60 payments have been completed, Jane's pension payment ends. This is the same for the guaranteed 120 payments. If Joe collects 20 payments and passes, there will be 100 payments left over for Jane to collect. Once the 120 is fully complete, the pension ends. Now, if Joe outlives the 60 payments or the 120, again, this is a lifetime payment. He will receive the payment until he dies. However, there will be no payments left for Jane. The only way to guarantee Jane a lifetime benefit is to choose a joint survivor option, that being the 50%, 75%, and 100% survivor option. Here are an example of retirement options for Joe: the 60, the 120, month guarantee, 50%, 75%, and 100% surviving spouse benefit. This breaks down a generalized number for an example. Joe's full pension unreduced is $3,000. That means his 60-month guarantee option will be unreduced. If he was to select a guaranteed 120-month option, he will have an actuarial adjustment reduction due to the extension of a guaranteed payment. His new payment amount would be $2,862. The next available option, which guarantees himself a lifetime payment and his spouse a lifetime payment, is going to be the 50% surviving spouse benefit. Another reduction will be upheld due to the fact that it is extending a lifetime guarantee to him and a spouse. $2,705 will be his benefit. If Joe passes, his spouse will receive 50% of his payment for life. And if you pay mind to the other options, the 75% and 100%, you'll see the same actuarial adjustments are in place, and the spouse will receive lifetime payment upon Joe passing. The higher percentage is guaranteed, the higher the payment for the beneficiary, the less amount for the member. Some pension features include a pop-up benefit. If you have selected a joint and survivor pension option and your spouse predeceases you, your pension will be popped up to its max value. Annual statements, which include information regarding your annuity, profit sharing, and pension, are sent out annually. If you have not received one, you may request one by the fund. A disability retirement pension is also available if you have been deemed permanently disabled by Social Security and have your award letter, which will have been supplied to you by Social Security. If you send it into the fund office, we will review and notify you if you are eligible for such option. Termination and/or suspension of pension payments. If you have began your pension and you pass, your pension will be terminated. If you have elected for a disability pension and you are no longer deemed disabled or return to work of any kind, your pension will be terminated. If you are collecting pension and you will violate the return to work rules, which are specified in a summary plan description, your pension payment will be disqualified. Other important information before you collect your pension are going to be your beneficiaries. For one, if you retire and you had filled out an old beneficiary card years ago, you may want to update the beneficiaries to your account. If you pass, these are the people that are going to be in charge of your account. Change of address. If you have moved and updated with your hall or the postal service, that does not count as updating your address with the fund. So please let the fund know with a change of address form that you have moved. Reciprocal hours. If you have worked outside jurisdiction of the New Jersey plan, let's say you've worked in New York or Maryland, you're going to want to notify us that you have reciprocal hours, as it may affect your pension. If you have been divorced or have a quadro, which is a qualified domestic relations order, please let the fund know, as it may affect your pension. And again, as we touched on before, the Social Security disability, it is important not only for your pension, but possibly for your health benefits if you are deemed by Social Security totally and permanently disabled, you are to notify the fund. Active participant death benefits pre-retirement. Being active means you have 2,000 hours in the prior 5 years recorded as contributions. If you pass before you retire and collect your pension, there will be a health and welfare benefit of $30,000. Healthcare coverage also will be included for 9 months after the date of death for your dependents. Also, whoever is listed as your beneficiaries will be in charge of your annuity accounts and may take a distribution if needed. Shifting over to the annuity portion, here is your overview. We're going to go over your annuity sample statement and annuity payment options. Here is your annuity statement. This statement is sent out annually and reflects values as of December 31st of the prior year. Your annuity fund is comprised of 2 plans, your money purchase plan and your profit sharing plan. Your money purchase plan includes all your pre-2009 contributions. Your profit sharing plan includes all your post-2009 contributions. If you have joined post-2009 the union, you won't have a money purchase plan. Currently, 10% of gross wages are contributed to your profit sharing plan. These funds are trustee directed and interest is applied annually. Your first money purchase and profit sharing distribution option would be a full lump sum. If you are to withdraw the full lump of your account, you are claiming that money as income, which is taxable. You will be mandatorily taxed at 20% per the federal government, and there may be a 10% early withdrawal penalty if you are under the age of 59.5 and are not on pension. If you are on pension or over the age of 59.5, there is no 10% penalty. Your second distribution option would be a direct rollover. In order to perform a direct rollover, you need to provide the fund with rollover papers, letter of acceptance from a qualified retirement account per the IRS definition or traditional IRA. Your second distribution option are monthly payments. If you would like to go on a monthly, you are required to make the amount in a multiple of 100. You can change your amounts twice a year, once in January and once in July. Your last distribution option would be a partial payout, which you're allowed to make one time a year. Money purchase distribution qualifications: retirement, if you're on pension, disability, termination of employment, quadro, which is the qualified domestic relations order mentioned previously, and loan provisions available. Your profit sharing distribution qualifications are similar to the money purchase as far as retirement, disability, termination, and your quadro. However, there are hardship availabilities. If you notice, there is no loan provision on the profit sharing account, unlike the money purchase.
Thank you, Junior. And again, as a reminder, please be on the lookout for information for Part 2 of our Retirement Awareness Seminars.